So, good afternoon. Today we are going to introduce the business of code. So first, I'm going to introduce what is a general purpose financial report, and then Caroline will talk about the doctrine of materiality, and at the end, we will introduce what is the limited liability. So, although I know most of you have already know many information about Coles, because there are only two biggest supermarkets in Australia. One is Woolworths and another is Coles. But there are something very surprised for me is they are owned by the same company. So because it's a supermarket, so it's provide many foods or drinks and some other things you will use in your daily life. And the code is not owned by a single person. There are a few people, but now the CEO of Code is called John Durkin, and it's a subsidiary company of Wesfarmers. So the Wesfarmers is the parent company of Code. So I'm going to tell you what is a general purpose financial report. So first, it's a statement that can tell you the outcome. So it will tell you what happened for your business, and then the users will use this statement to make the decisions. So the objective of the general purpose financial report is to provide the information to the users to make the decision to allocate their sales resources. And when the general purpose financial reports meet this objective, they will become the means by the management or the governing bodies to discharge their accountability. And the management will use the information that is provided by the statement to know how can they allocate their resources. Otherwise, if they don't know these things, they can't do anything. Because if they don't know their business, they can't make the right decisions. And the codes make a very good and specific financial, general purpose financial report. So it brings this company about more than $50 billion last year. So now I will move to Caroline, and she will introduce.
Hello everyone, I'm Caroline. Today I'm going to talk about the doctrine of materiality in Coles. Coles is an Australian supermarket. The type of Coles is a company which has limited liabilities, and it has more comprehensive street reporting area to adhere to. Coles is a large company. It operates 776 supermarkets, and it has 100,000 employees. It operates together with Woolworths, accounts for more than 18% of the Australian market. The accountants in Coles I research is financial accountants. In terms of the management functions, the accountants have the responsibility to supply accurate, relevant, and timely information in a format that will help financial users to make decisions. For financial functions, the accountants need to help the users to assess companies' financial performance. The financial reports including the income statements, the balance sheets, and the statements of cash flows. Okay, let's turn to the doctrine of materiality. The materiality concept states that the financial information in the financial statements that will change the opinions or view of the financial users will be recorded in materiality. In business, some small items could be material. For example, if items would have changed net loss or net profit, it will consider material. And materiality concepts, it would be changed based on the size of the entity. For example, the multinational company or large companies such as Coles, they would consider $1 million transactions is immaterial of its total activities, while this $1 million will exceed the revenue of the local small firms. So it would be very material to that smaller company. Also, the doctrine of materiality is a key point in accounting. For example, let's say the doctrine materiality will help auditors and accountants to make decisions which figures need to separate reporting. Let's make cost as an example. In terms of the nature of the event, the accounting policies is material and can't be ignored because it helps the external users to understand how the management arrive at amounts in the financial statements, and also the legislations such as tax laws in some products is also considered as material because it will potentially influence the revenue or the profits that the company earns. In terms of the size, if there is $1,000 owing by customers to the Coles, it would consider as immaterial. However, if the amount is $2 million, it will consider it as material to the business. Otherwise, it would make incorrect decisions by the financial users. Okay, I will move on to Vera. Thank you for your attention.
Before I start my talking, I will have 2 questions to answer. Yeah, do you think Coles is a successful business? I think the answer is yes. The reason why I said that is because talking about the supermarkets in Australia, people will first think about the Woolworths and Coles. Yeah, and as the main competitors of Woolworths, Coles have 690 is in Australia. Yeah, and it occupies nearly 55% of the whole Australia. Yeah, and so that it should be the successful business. And next question is how do the following concepts relate to the Coles? Yeah, and this answer is because Coles is a limited liability company. Yeah, and it also called the LLC. Yeah, and so that it is about, and also my topic is limited liability. So Coles is this kind of company. Yeah. Yeah, and this is limited liability. Limited liability does not assess the amount invested in a partnership or limited liability company. Yeah, and the feature of limited liability is one of the biggest advantage of investing in public listed companies. Yeah, and also maybe the first point, the first and second points are too far away from us. Yeah, and I can show. And the third point is, I think, is more simple to understand it because the shareholder does not have remaining debits obligations if it subsequently go bankrupt. And the meaning of this sentence is about if Kroos one day was bankrupt, yeah, and this company have to make all their things or maybe the goods to the money and give it to the bank or other someone. And if there are also many debits they haven't finished to return, yeah, and the holder have no yeah, and the holder have no responsibility to finish it. Yeah, and it's different for the unlimited liability company. Yeah, and I'm sorry that I can't find any picture or graph about this topic. Yeah, and next slide is about the reference list of our groups. Yeah, and in conclusions, all the things, especially the things William said that is very important for a company. Yeah, so if a company want to be successful, and all these things they have to consider it. Yeah, and that's all. Thank you.